So, you want to learn bookkeeping. Payroll. By Dave Marshall. Payroll Taxes. IRS Payroll Tax and Withholdings Deposit Rules. As most of you are probably already aware, the IRS requires employers to deduct Social Security and Medicare from their employees' wages and to match what is deducted from their employees' pay for Social Security and Medicare. Social Security is deducted from an employee's earnings at the current rate 2020 of 6.2% and Medicare is deducted at the current rate 2020 of 1.45% or a combined rate of 7.65%. The employer is also required to pay match 6.2% and 1.45% of an employee's earnings. In another lesson, we deducted these amounts when calculating our employees' pay. Taking the deductions is only half the battle. The other half of the battle is monitoring, filing the proper forms, and depositing these deductions. The IRS requires an employer to pay or deposit these taxes as you go. Since these taxes are deducted from an employee's earnings, reduce the amount directly paid to the employee has incurred an unpaid liability to the IRS on behalf of his employees. Additionally, the employer has also incurred a liability to the IRS for his employer's share. These amounts can build up fast and become substantial liabilities if not paid at regular intervals. IRS Publication 15 provides detailed instructions and guidance on payroll taxes and tax deposit requirements. I've tried to simplify and summarize some of the main rules and requirements in order to give you the basics in a nutshell. Normally, a business must periodically deposit income tax, Social Security and Medicare withheld from employees' wages along with the employer's matching contribution for Social Security and Medicare in an authorized financial institution or use the electronic federal tax deposit system. A payroll tax deposit is comprised of the federal income taxes withheld from your employees' wages and both the employee and employer portions of Social Security and Medicare taxes. Businesses that have quite a few employees normally are required to make periodic deposits of payroll taxes and withholdings based on a determination made at the beginning of each new calendar year. The two methods of making deposits are 1. Monthly and 2. Semi-weekly. The determination involves determining what the liability was for what the IRS refers to as the look-back period. If this liability is less than or equal to $50,000, the monthly scheduled deposit rules are used. Otherwise, the semi-weekly deposit rules are used. Deposit rules. You must make all federal tax deposits using electronic funds transfer, generally by using Electronic Federal Tax Payment System, EFTPS. EFTPS is a free service provided by the Department of Treasury. Forms used to report IRS taxes and withholdings. As I stated earlier, not only does a business have to pay or deposit these deductions as they go, but periodically they must also file forms that summarize and report the information about these deductions. Form 941 is filed each quarter to report and summarize the deductions made from your employees' wages and the deposits made to the IRS for these taxes and withholdings. Penalties for not filing timely can be quite steep. Unemployment taxes. Most states have payroll taxes that are normally only paid by the employer and are used to accumulate funds for paying employees when they are unemployed. The federal government also collects these taxes and uses the money to administer the unemployment programs. If your business has any employees, you will normally have to pay both state and federal unemployment taxes. Federal unemployment. If you have at least one employee for 20 calendar weeks during the current or preceding calendar year, or you pay at least $1,500 in wages during any calendar quarter in the current or preceding year, you are required to pay federal unemployment taxes. Form 940 is used to report and account for federal unemployment taxes. The report is filed annually and is due by January 31st. The taxes are calculated and deposited quarterly. They should be deposited by the last day of the first month following the end of a quarter. The federal unemployment tax rate is 6.2%, but this rate is reduced by a maximum of credit of 5.4% for payments made to your state unemployment tax fund. If your business qualifies for the maximum state credit, the rate used to compute your federal unemployment tax is 0.8%. Not only does a business have to pay or deposit these taxes as they go, but periodically they must also file forms that summarize and report the information about these taxes. State unemployment taxes. Normally, state unemployment taxes are imposed directly on employers and the business employer does not withhold these taxes from employees' wages. In most of the states, if you're required to pay federal unemployment tax, you're also required to pay state unemployment tax. Actually, all employers should check with their state to determine what, if any, special rules apply. The tax is usually reported and calculated quarterly, and the state supplies the forms used for reporting and calculating the tax. Normally, like the federal government, each state has a maximum wage amount on which the tax is imposed on each employee's wages. In order to calculate the tax, the state assigns a rate, experience rating, for the business to use, normally based on their experience. In other words, if your business has a lot of layoffs, your assigned rate will be higher than if your business has relatively few layoffs. The state-supplied forms are relatively easy once you have the information assembled for making the calculation. For the quarter, you will need the total amount of wages paid to your employees and the amount of what is normally called exempt wages. Most small business owners don't want to fool with preparing these forms and have their bookkeeper or accountant prepare them for them. You should, however, at least be familiar with your deposit and reporting requirements and make sure that they are performed in a timely manner.